Well, hello everyone. It is Friday, October the 22nd, 2021. I am Dale Delbridge, Benchmark Realty, Murfreesboro, Tennessee, and this is your weekly status chat. I have the three numbers we've been tracking over the year, and we'll look at those in just a minute. But I tell you what, we've got some fine entertainment on tap for tomorrow, which is the Tennessee Volunteers at Bryant-Denny Stadium in Tuscaloosa, Alabama, facing the Tide. Now, that should be a pretty good game. It is, after all, a PM game. At 6 p.m., I think is what the kickoff is. ESPN. Check in if you're an SEC fan. Now, we do need to take care of course, our housekeeping, which is always our advertisement we run every week, just to make sure that Tennessee Real Estate Commission can't say I didn't give all the information. So we're going to run that right now, and then right after that, I'm going to get into an article dealing with iBuyers and something that is a little deeper explanation than what you may have seen, because you may have already seen this. News came out about 2 days ago. So let's get to those things.
Hello, I'm Dale Delbridge of Benchmark Realty, Murfreesboro, Tennessee. If you are currently unrepresented and would like to know how to compare up to 3 properties side by side and room by room, then go over to my new YouTube channel. Call Dell to Sell. That's one L in Dell, no spaces. Watch the demo on Real Scout and then call me and we'll set up your exclusive ad-free account today. I have a news article on the industry that I'd like to read today. A little bit, I'll glance over it because it's about a 10-minute article to start with, and then of course if I kibitz a comment in there, it just slows it down even worse, and I don't want to take that much time. So we're going to hit some highlights of it. This is from Market Watch. Market Watch is a paid subscriptive service, as well as they earn money from ad revenue as well, but they augment it, and I find they do a pretty good job. This article goes into some details and speculations from other analysts in the industry versus just simply parroting Zillow's public statement. You will find the link to this article in the description of the status chat on the YouTube channel. This is from October the 20th by Jacob Passy, and the title is Zillow Pauses Home Buying, Raising Red Flags About the Real Estate Market. Now, I would like to call your attention to the reference symbols. This is within the article. These are real time, and if we're lucky, we'll see one flip over on us while we're talking. We see that Zillow has paused acquisitions, and they're actually in the green. We see that Redfin, OfferPad, and Open Door also, iBuyers, are in the red. They're losing, and they're going to discuss this just in a minute. Zillow's unexpected announcement this week that it is putting a temporary stop to its home buying activities raised many analysts' eyebrows, and some argue that more concerning trends could be on the way. The service Zillow offers is what is known as an iBuyer. It purchases and sells homes directly to consumers, typically renovating them in between. And that really is a broadly abused term on what renovating means. It could be as little as doing floor and painting walls and fixing dings, which is about like putting lipstick and sending it back out to dance, versus actually having a major rehab there with a trainer. Following a report from Bloomberg, Zillow, now we see that it is up, confirmed that its Zillow Offers division would not be signing any additional new contracts to purchase homes through the end of 2021. In explaining the move, Zillow said the company was facing a backlog of renovations dealing with operational capacity issues. And that makes perfect sense, and that's what most of the other news reports are telling us. Zillow's competitors continue to expand their operations. We're operating within a labor and supply constrained economy inside a competitive real estate market, especially in the construction, renovation, and closing spaces, Jeremy Waxman, Zillow's chief operating officer, said in the announcement. She added that the pause would enable the company to focus on sellers already under contract and the company's existing inventory of homes. Other iBuyers have not followed suit as of now. In fact, it's just the opposite. Most of Zillow's competitors re-emphasized their expansion plans in the response to the announcement. And we see that Zillow is up and Redfin, OfferPad, and Open Door are down because they're saying we're going to continue great guns. So the market is responding to this behavior. Redfin is down 3.28%. OfferPad is down 2.19%. And this is real time because these are actually tickered right into the article. Spokesman for Open Door is down 1.35%, said the company is open for business and continues to scale and grow. Meanwhile, Open Door co-founder Keith Robus said on Twitter, Zillow's claims regarding supply chain bottlenecks was just an excuse. And yet we see the halt in iBuying going up in Zillow's benefit and down in theirs. Now, some people argue that the whole idea is to catch as much of the market as humanly possible. Now, we just read last week in a previous status chat that they only have about 1% of the market. Yes, 1% of the market nationwide, but it can be much, much more in places like California, who are seeing prices go through the roof. Let's see, where do we have? Yes, OfferPad is expanding in 3 markets in California. 29 markets Redfin is expanding into. And we slipped down here. I don't believe they told us how many we're going into with Open Door. But we see a definite spread of these iBuyers. And if they can buy enough property, they might be able to influence its resale value and cost when somebody goes to buy it. National Association of Home Builders, which actually builds homes, does concur that there is actually some hiccups in the supply chain. That shouldn't be anything exciting. Because Zillow's business model is much more focused on aggregating eyeballs across the spectrum of real estate transactions, it may make sense for them to periodically de-emphasize the riskiest or most capital-intensive parts of their business, as opposed to those of their peers whom that's all they do, said Michael Green, co-founder and CEO of ResiShares, a residential real estate investment company. Other analysts were more circumspect about Zillow's move, especially in light of its recent success with iBuying. Wedbush analyst Yago Aronian downgraded Zillow shares to neutral from outperform on Tuesday in light of the pause of the company's iBuying pursuit. Among his concerns are that rivals like Open Door will continue to increase market share while Zillow takes a breather, making it harder for Zillow to bounce back. Concerns about home prices. Capacity constraints alone don't explain everything, Stevens analyst John Campbell said. We do think that there's likely more to the story, so we are surprised to see the positive reactions out of some of the other iBuyers, he said in an email to MarketWatch. One explanation is home prices. The past year has seen an explosion in home price growth as home buyers seeking more space scrambled to compete for very little inventory in the market. Investors, including iBuyers like Zillow, were caught in a melee. The share of cash buyers, which includes iBuyers, has reached the highest level since 2013, and while some cash buyers can score a deal at or below a home's asking price by the nature of offering a simpler closing process, the fierce competition today means that many are paying a premium for the homes they're getting. In an August report from independent real estate analyst Mike DePreet found that Zillow, OfferPad, and Open Door were all paying well above the value of homes to purchase them in 2021, whereas back in 2019 they typically purchased them at a discount. Zillow's other business lines give it an even deeper perspective into the belly of the beast. Between their real estate portal that buyers use to start their search, that would be their website, and their Zillow Premier Agents division, Zillow has a pulse on buyer demand in the direction of home prices. Now, as we know, Zillow is a website, and they have the ads and they have all things going with it, but you give them your information. And Zillow also has an iBuyer division, so they may actually send somebody out to offer to buy your home. If they cannot successfully offer to buy your home, they may then sell you as a lead to a real estate agent. Some analysts reason that the company might not like what it's seeing. It is possible that Zillow is seeing something in their data that maybe in the margin makes them a little bit nervous about holding inventory right now, said Tom White, an internet research analyst with D.A. Davidson. See, I like Market Watch because they do a pretty good job of sourcing everything that they're coming up with, and they're telling you whose idea and opinion it is. Could regulatory scrutiny be a cause? Zillow's home buying operations aren't popular with everyone. Last month, a series of videos from TikTok from Nevada real estate agent went viral, claiming Zillow and its competitors were manipulating the market. We actually looked at that. Those claims were quickly disputed by real estate experts, since no iBuyer has enough market share to truly move the needle where home prices are concerned, but that doesn't mean the companies aren't escaping scrutiny. Okay, what did I tell you? As we looked at the iBuyers up top of this article, we see that they are concentrated in certain markets. And we also see that in these certain markets, California, they're expanding into Riverside, San Bernardino, Sacramento. Redfin is making its plans, 29 markets to expand into, and we're seeing that they're moving. So we see they're moving a lot in California, and California's prices are going through the roof. So it's not necessarily that the iBuyer has a major effect in a local market as ours. It depends on where their market share is, and 1% nationwide is not 1% in California in those markets where it may be significantly higher. Okay, slide on down here. Let's wrap this up. Unfortunately, Zillow and iBuyer investors in general, the answer to these questions might not rise to the surface until later in the year and possibly into the next year, he added. So that's Mr. Campbell putting his 2 cents to it. And you know what? We don't really know what the future holds. We do know that money is out there, but inflation is killing so much. I put gas in the propane tank last year at $1.49. This year I just topped off. It was $3.49. I think my last fuel for my little baby Prius I put in was like $3.50 or something like that. It was terrible. So these things are going to cause a bite into people's budgets, and that may affect what people can afford to buy. All right, we've got opportunity ringing. We got to get off this and put this together. Oh, pardon me. I didn't see you came back. I just put that aside. So what the article said was Zillow, probably the biggest and one of the earliest ones, who have access to tremendous amounts of electronic data based upon consumer behaviors, has stopped buying homes for inventory through the rest of the year. And it's what, October? So we got October, we got November, December, 2 more months, 60 days. It's really not that long a time. They didn't indicate if they're going to go any further, but they've stopped buying. The other 3 major iBuyers jumped in and go, well, we're not. And we see how the market has reacted to that. And we do know, like I've been pointing out, people say, we'll never get anything negative or anything politic. But the reality is national politics affect state politics, which affects personal income all the way down. It trickle down. It's just the way it is. And right now we got the beginnings of what I told you was going to happen. Runaway spending creates runaway inflation. And Zillow says that's the reason they're stopping. They're going to take care of the business they have. Other people maybe not so sure that that's a complete answer. Meanwhile, other iBuyers are jumping right in there. And anyway, let's get to our numbers from the previous week, the week of 10/14/21. In the Opportunities Real Scout System, 10,171, which was down over the previous period. 4658 was the under contract still showing. That was up slightly from the previous period. And the ratio, energy ratio between the two at 46% increased a little bit. This week we had 10,158, which was down over the previous period, and 4667 in the under contract still showing, which ticked up slightly, but the ratio at the energy level, at the integer level, remained the same. So there we go. We appreciate it. And I tell you what, football game is going to be interesting. I tell you what,
I got a corn dog I got to get to. So y'all have a blessed weekend, and go Big Orange or Roll Tide, whichever suits you the best. See ya.